Good morning. Coming to you live from Nasdaq's global headquarters in Lower Manhattan. Welcome to the Tuesday edition of Nasdaq Advisory Live, brought to you by Corporate Solutions. I'm your host, Will Briganti, and joining me today is Masood Gausi. Masood, great to have you back.
Hey, Will. How's it going?
Good. Happy Tuesday. Let's get started. We are in the thick of earnings. Any high-level comments for us today?
Yeah, so this week we're seeing 191 S&P 500 companies reporting earnings. It's peak week for earnings. In terms of EPS growth, EPS being earnings per share, the basic bottom line for any company, we're seeing growth, Q2 growth relative to last year's Q2, 9.6%, which has been revised up. If we exclude the energy sector, it's around 7% growth. So robust growth with respect to U.S. companies.
Sure.
In terms of valuation, price over earnings per share, which is the basic valuation metric, we're looking at a forward-looking PE of approximately 17.8 times, which is generally considered to be rich, depending on which look back you take, 5-year, 10-year, 15-year. The average is around 15 times. If we look back 20 years, which incorporates the dot-com bubble, then it's in and around 17 times. So definitely much more rich than the last 5, 10, 15, 20-year look-back periods.
Right.
Yeah, so valuations are rich. We're seeing growth, and we're peak week in earnings.
Awesome. Thanks for that insight. Let's switch to the technology sector. Obviously, a lot of eyes are on Nasdaq-listed Amazon.com, Alphabet, the parent company to Google, and Facebook, which will report earnings this week. Any sort of high-level thoughts on the technology sector?
The technology sector this year has been rallying. The sector is up over 23%. It's driving most of the market gains. With respect to the three names that you mentioned, they're huge companies, outsized valuations. They have a lot of impact on the markets. They're high growth names. All three have rallied over 20 to 30% this year so far. So any sort of change in their growth trajectory from an investor standpoint may dampen market sentiment. As such, a lot of eyes are on these companies.
Sure.
In terms of Alphabet, the parent company of Google, they announced earnings this morning. They beat top line and bottom line, but the stock is down 3%. I guess investors were expecting a much bigger top line and bottom line growth.
Okay. Obviously, switching gears, let's look ahead to next week. Anything that our viewers in the investor relations industry should keep an eye out for?
Obviously, earnings, we're in the thick of it, continue to be in it. In terms of sort of more from a macro perspective, the Fed meets today and tomorrow. All eyes are on the Fed also, as they will be discussing rate hikes. Doubt there will be a rate hike this period. But we're looking at odds of another rate hike in December, somewhere around 50%. Also, all eyes on what they will be doing with all the assets on their balance sheet, how they will be pairing the bonds. Those are the two main issues. In terms of politics, the healthcare bill, where that's going, and also tax cuts are what the investors are eyeing.
That's right, of course. So more to come for that, obviously. Well, thank you very much, Masood, for that insight into what's happening in the markets today and this week. We appreciate you joining us.
Thanks, Will.
All right, great. So for all of our viewers, thank you so much for tuning in to the Tuesday edition of Advisory Live. We look forward to seeing you back here on Thursday, where we'll be joined by Masood's colleague, Josh Ellman, to discuss consumer sentiment. Josh is a retail specialist, so look forward to seeing you back on Thursday. Have a great day.